Friends, good morning. My name is Naveen. Actually, I have opened this YouTube channel to give the information about the share market. So, this is my first video. Please try to subscribe and try to help me if you think that my content is good. So, today's topic is about 5 reasons why everyone should be there in the share market. So, I'm going to take you through this PPT to just to show you the different facts why we should be there and why what is the achievement you're going to make kind of thing. Yeah, so let's start. So the reason number one is inflation, as you all know. So inflation means the money's value will be last day by day. So that means I mean if you still remember your childhood and now, of course, whatever things you are able to buy during your childhood, and if you check now, it will be there is a lot of difference, that will be too much expensive already. So that's what I'm trying to explain today. As you can see in the picture here, so the this is one of the study from the US organizations. So the inflation between 2022 2000 and 2022. So as you can see here, some of the item, of course, they are falling down, maybe cell phone software and all these things, because of the different innovations. Otherwise, the normal things are always climbing up. They keep going always like that. So you can think of yourself an example. For example, if you're buying a toothpaste when you're in childhood, and if you were 10 years back, and now if you see there is a big difference, the price would have increased. So that is what it shows here. Price will be keep on going up. So think of uh, if you're not getting income today, what will you do? I mean, you can't buy, right? That's why it's always important that you save your money for the future, considering this inflation in the mind. So let me go to the next slide. So this is also one of the example. This is just a time difference between COVID time and May 2021. How the inflation has increased the prices. As I was giving an example of the oil, if you see, so Ruchi Gold and other things were 120 rupees, and yeah, within 1.5 years difference, I think it has already raised so much. 50% changes at the prices. Similarly, the soap and other things, Lipa and other things. Similarly, detergent. These are the examples given. But the point is always the in India the consumer inflation, as you can see here, it's an average actually of course more than five only always. Only few years it has come down below five. Otherwise, consumer inflation is always there above 5%. The average, as you can see, it has reached sometimes till 10. As you can see here, that means the prices will be increasing every year 10%. That's what it the meaning. If one of the product is 100 rupees this year, it will go to 110 next year, like that. So, and also another important thing, why and what instrument or the what investments can beat the inflation. If you are investing somewhere, definitely you should beat the inflation. Otherwise, the value of the money will be keep on going down. So let's say if you withdraw some 1 lakh rupees money and keep it with you in a box here in a cupboard. So after 1 year, what will happen? So the value, because of the inflation, what it was able to buy 1 year back, and if you go with the same money and if you try to buy something, so that it has already lost the value by 8%. You know, I mean, approximately it will become the value of the money has become 92,000 rupees. That's why you should never keep your money in the as a cash, and also you should never keep money in your bank account. So this is what one of the article which I've taken the screenshot from. So as you can see, so these returns will be zero cash. In saving of account, if you keep, it will be mostly it will give you 3 to 4%. If you keep it in bank deposits after tax, it will be 5.25 to 7.5% at the current rate. Gold also actually it increases only by 6 to 7%. Insurance policies also actually they will give you only 6 to 7%. And also even if you see the returns what you get from the insurance policies, it's very less. I mean it will be hardly 6 to 7%. And also you cannot insure for more amount. So if you want to take a, for example, insurance for 1 crore, so definitely the EMI will be or the premium will be so high, you will not be able to afford that. So that's why you should never. Anyway, I can also cover this insurance topic later. So, and also if you see PPF, yeah, of course it will give good returns. It is also fixed by government, but only problem with this one is it is locked for 15 years. You can't withdraw it. And also there are unit linked insurance policies. So this also actually it can give till 8 to 12%. But actually, as you can see here, high charges. There are also a lot of charges for the bank or the whoever is selling these ULIPs. They will get a lot of commissions out of that. That's why it will also erode the gains. Similarly, as you can see, there are balance funds, there are also MIB funds. So these also will give you, for example, 8.5 to 9.5. So as you can see at the last, only equities has been able to beat the inflation in the long term. So equity funds means it could be mutual fund, or you can also directly invest in shares. So of course I'm going to cover these topics in the future recordings. So just to give an idea of that, so you should be able to invest in somewhere where it can beat the inflation. You know. So second reason is, so I mean we think that okay government it is, I mean there will be some old sayings right by your parents or something. No, no, share market is risky like that. But one thing you have to know is even the government also investing in share markets. So I can give you some examples. So as you can see here, this is the link which where actually I pulled out of the LIC's investment. So since you will be mostly some of you would have taken the policies. So what they will do, they will take the premium from you. Sorry, the amount from you, and then they will actually invest it into share market. As you can see here, so 10 lakh crores investment is there from SAP. This is one of the articles which was published in Economics Times. So that's what it says actually. So that means LIC is also investing. Even if you go to screener link and check, you know so I can also say here, I mean, president of this is the shareholding of the president of India. You can see how many companies they invested. Either it could be a government owned company or they are also investing separately. For example, if you see IDFC First Bank, Indian Bank, ITC, so many companies actually they've invested. You know. And you can also see here LIC. If I can go to the shareholding patterns here, so these are all the companies which LIC is holding. Every year they will also doing kind of a increasing their holding and decreasing that kind of things. The trading also they'll be doing it. You know, this is also another reason. Why everybody should be there in share market. Of course, here you can see this is the net total net worth of President of India, and this article anyway showed you not only just the Indian government. Even if you can also see the articles of German government, US government. I mean, everybody invests there. So, for example, if you are owning any business, uh, I mean, if you are earning 1 rupee, for example, as an employee, you will be only worth 1 rupee only. I mean, so there is no chance of getting more than this amount. But of course, if you open a company and if you go to share market, there is a thing called price to earnings ratio. That means if you are earning 1 rupee, the market is ready to give you anywhere between 10 to 30 rupees. 10 times that much your earnings will be increased. So that's why everybody try to go to the this share market. Reason three is liquidity. Your money will be in your bank account in 2 to 3 days if you sell a mutual fund or a share. It hardly takes just few minutes, just a few clicks here and there to sell, and no other dependence. You don't need to look for a buyer. You don't need to post an advertisement somewhere to sell it and all those things. It's very simple. And also, if you are selling a gold and all, you can think of, when you're buying a gold jewelry, for example, they will, it's so much charges will be there. They will say this making charges, they will say wastage charges, they say so many things they will keep on adding. But if you go to sell it, the same thing they will say the wastage and all, they will remove it, it will lose a value. Similarly, for example, if you want to buy a real estate, buy or sell a real estate, you know the pain. It's not so easy to for us a middle and like us to find a land or site, and also an apartment very easily and at a reasonable price. And also selling is also difficult for us. Yeah, PPF anyway, you know that actually there will be a lock-in period of 15 years, so that's why it's also not easy. Reason four is flexibility. I mean, you can invest as less amount as possible. You can start a SIP, means systematic investment planning. That means you keep investing the same, for example, 500, 1,000, whatever. Minimum is 500, and you can keep buying the same. You can keep putting the same amount every month, or you can also buy it as a one time. So that kind of flexibility is there. And also, reason five is there is also chance of building a wealth, and also you can achieve a financial freedom. That means you will have enough money so that you don't need to compulsorily work. You can also decide yourself, you want to work or you don't want to work, like that. So why I'm saying is, for example, so it's kind of a one way. I mean, the share market will always be going one way up. So even though there could be multiple reasons will be there for the market correction here and there, but actually, in long term, if you see, it will always goes up. So this is a example of the Sensex, which it started, for example, in 1990 it was 1,000 points. So there are multiple reasons for the corrections. For example, there is one, Rajiv Gandhi was assassinated. That's why the market fell down. Similarly, there was a liberal budget. That's why it is corrected. And there was a Arshad Mehta scam in 1983 that because of that it has corrected. And there was also, I mean, there are multiple reasons for the market correction, as you can see here. In 2008, it was actually kind of it has since crossed 20,000, but it has crashed actually because of the Lehman Brothers or some issue. So in a long run, as you can see, it'll always go up. And if you look in a short term, it looks like it is falling down and it is risky. But if you're investing more than 10 years in mind, it will never be risky. So that's why I would definitely suggest everyone to invest. And also you can see here, so this is one of the long term returns, which has given by some good companies in India. So if you would have invested, for example, 10,000 rupees in Infosys, that amount would have been this much. When it's 2.97 crores, so number of years, 24 within 24 years, it is multiplied by 2,973 times. And CAGR means it is how much the returns is given every year. It is 39%. You can't even imagine, putting 10,000 in Infosys 1993, and if you're seeing that 2.97 crores, can't even imagine in any of the other asset this that can give this much of returns. Of course, I'm not saying that if all the shares whatever you invest will give this much of returns, but there's a chance, and even if you don't get 39%, if you keep at least 12 to 15% in your mind, definitely that can be easily achievable if you invest in mutual funds. Mutual fund, these are all direct companies. Mutual funds is nothing but actually there will be fund manager who will be selecting the companies for you based on the theme of the fund. So there are different kinds of fund which I'll maybe anyway take up in the next videos. So they will actually invest in multiple companies, between 30 to 50 or more than 50 companies. So they will be investing whatever the money you put every month. So they will select the companies, and there will be a fund manager who will be working, full time for managing that fund. Of course, there will be some charges, but that fund manager job is to manage this mutual fund. That's why he will ensure that at least 12 to 15% of the returns is given every year in a long period of time. 20 15% of returns you will not get if you just keep it in your bank account, for example, that you will not get it. And as I said, inflation is 8%. If you don't beat the inflation, so the money will keep on losing the value, and in the long term, so it's kind of a bad decisions, because of the inflation, the money's value will be keep on going down, and you will not have enough money in the long term. Thank you so much. This is my, as I said, this is my first video. Please subscribe to my channel if you like the content. Of course, I will be keep on uploading different kinds of videos related to investment, personal finance going forward. Please support, and see you all in the next video. Thank you so much. Bye.